So, good morning, active traders, and welcome to our Trading Week Ahead broadcast. I'm Ken Calhoun, your host, coming at you live from Colorado here on August the 20th, 2022. Good to see you all here. Market did pull back as anticipated. It did break that 4,200 level, and it did, in fact, give me the 3 green days I was looking for, but then immediately rolled over. So, how many of you think we're in for a minor correction or a major correction coming up next week? Or maybe you think the market's going to rally up. What do you think? Big up, big down, small down? What do you think the market's going to do? Let me hear your thoughts. I'm curious. So many of you here. Don't everybody type in at once. Do you think the market's going up or down next week? Let me know. Okay, there we go. Starting to see some responses. Good to see everybody here. All right, well, we're getting underway and making sure that we are all lined up. Big down, big up, major correction, small up, major down, big time down. Okay, starting to see some big moves. All right, anyway, we'll see. One of the things that I like to look at is the VIX, and we'll start off with our S&P. You can see that obviously we broke that 4,200 key resistance level. And if we look at the 6 month, you can see a little more context here. We did pull back off. Now, this was the breakout area that we were all looking for, right? At the 4,200. And remember what I said last week. I wanted to see 3 green days in a row and then go in if it gets above that. It never did. We got here's a quick candlestick tip. What do you notice? What was the early warning sign that the market was about to roll over on the way up? What was the early warning sign? This can really help you trade, potentially help you trade a lot better. I use this kind of decision making to help teach my traders in my live room and my courses and my brand new forum. We have a new discussion forum at my Day Trading University site. Anyways, let's see. I don't see any answers. Okay, the answer is the declining height of the whole real bodies of the candles tells you buyers are running out of steam. And again, for more on candlesticks, learn from my colleague Steve Nissen at candlecharts.com. Declining whole real bodies. Range is everything. I've been telling you guys this for 22 years. Range is everything. Range, write that down. Stamp it on your forehead. Range is everything. Range declining says, oops, the buyers are running out of steam and it may roll over. That was a warning sign. Now, we do not see a shooting star. When you wish upon a star, ba-da-ba-da-ba-da-ba. No shooting star. No bearish engulfing. No tweezer top. No sign of reversal for you, Sparky, except what I teach, which was looking for declining heights of the candles, right? And that's something I know Steve teaches too, looking for when the bulls are running out of steam, when the bears are running out of steam. Anyway, the point is, we had a sign of some little trouble there. It's a shooting star right parked above here, but it closed high, so that negated the shooting star, the shooting star, and we had declining whole real body candles. So that was a first clue. Now, why should we care about this kind of stuff? Because it tells you when to get out, okay? It tells you exits are, I guess ranges are really important. Exits are everything. Risk management is everything. Declining whole real bodies. If I'm in a trade and I'm in the money and I start to see any sign of, warning, like declining heights of the green, doji, red candles on a pullback, that gets me out of the trade. And so that should have got you out of the market at the 4,300, right? Right underneath that. All right, so now that we've got that, let's take a look at our VIX. Now, the VIX is not making a spectacular comeback, but what do you notice about the VIX? There's one thing that the really smart technical guy, probably my favorite, he is probably my favorite guy on CNBC, which is Carter Worth, the chart master. He had mentioned something about Apple had been going up. I'm not going to put words in his mouth, but he had some really good observations about Apple stock along the lines of it went far, kind of too far, too fast, unnaturally long run up. And sure enough, he was right, because he called the top and it rolled over yesterday. That was a brilliant call by Carter. Well, anyway, similarly, you want to look for charts if you're looking for bottom fishing, things that have been selling down unnaturally long, more so than they normally run. That's the key, is how long do these instruments run one direction, directional volatility? What's the range look like before a reversal? So for example, you can see this is a bit extended for it, right? And the key is, right, what do we notice, right? The length of that run down is the length of this run up. So it's out of gas, right? Look at ranges, either on multi-day, multi-month, or for state traders, multi-minute. Look for how long did it run the last time it ran before it reversed. And that holds true for intraday charts as well. Anyway, so it ran up as far up as it had run down. So it may well be due to cycle back down, at least to a 50% retracement. Now, let's take a look at the chart that I was interested in here, that one of the things that I like to trade routinely, and knocked it out of the park this past week with UVXY, boom. What do you notice about this chart? It's gone down far too long. Tied to the VIX, the VIX always does what? The VIX always goes up and it goes down, and it goes up and it goes down. This is extended down, just like the VIX is extended down. I say overextended, and the reason I say that is it's gone farther than the last two legs, and it's right near support, and it's starting to pivot. So if we look at, for example, some of the inverses, like SQs, same thing, right? They all broke their downtrend as of yesterday, and they're starting to get some volume. So for example, if you take a look at this, we're right at resistance there. If you take a look at our UVXY, which is the one I bought 1,000 shares of yesterday, I could be wrong, we'll see. Won't be the last time. But we have a large green candle, a larger than we've seen in a month candle. And the main thing is a large green volume bar at the bottom. Large green buying volume yesterday. Largest volume bar up since June. So it's the biggest volume bar in 2 months of buyers yesterday, of which I was one, to the tune of over 1,000 shares. Now, I would like to get a 50% ROI or even double. But if I can buy 19, sell 14, sell 15 in that range, I'm a happy camper, right? I'm up $4,000 or $5,000. So what you're looking for is pivots after extended runs down. And the way to validate those is a large green volume bar at the bottom of the chart. If you don't have supporting volume on the reversal, it's not a good entry. Say if the volume were down here under 60 mil, I wouldn't have bought much. I would have bought a little bit, but not much. But since the volume was pretty high, I did too. So we'll see if that bounces. What are some other charts? SQs. I also like to day trade and swing trade SOXS. And you can notice too, please, here, we're right off support. And this is really big, large green volume bars. And that tells us that institutional professional traders that know what they're doing, that can swing a lot of money and move these things, move it, are voting with their dollars. And so should we. So I like to follow, I don't follow things like insider, not the insider, the things like the options plays or all that kind of background stuff. I just follow the charts. All I care about is price action. So if we're at support after a big drop, that's a really good opportunity for a potential bounce. Now, often you'll get shaken out. Maybe you get shaken out once or twice. I keep trying, and the third time or whatever is a charm. So those are the kind of charts we like to focus on. How about that Bed Bath & Beyond? What a wacky stock that was. Whoosh, boom, dum bum bum bum. A meme stock story. And you can see our intraday chart. Well, I'll look at the intraday in just a minute, but it just crapped out down here. I tried to buy a bounce here a bit, but not with much luck. It didn't run too far, so. But what a gapper yesterday, right? From 18 to 10, one of the bigger gaps of the week. Now, these are really stupid charts to swing trade. I would never swing trade something like this. I like slow and steady wins the race charts. I don't like, I mean, not too slow like AT&T or something, or even Ford's kind of slow. Ford finally back up near the 15, 16 after the drop down to the 12, and it's still holding its own, but we have a shooting star. I like Ford stock, I like Disney stock, and I trade them both, but I'm not going to trade Ford here now. We have a shooting star. Dun, 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 dun. That says, sell me right here, right? And sure enough, it's starting to drop. It says, don't buy me until I get back up there. Now, remember, guys, here at Netflix, I've been calling it for you folks here and for my live roomers at just over 100 a share. Now that it's up at 120, where would you trail a stop if you were Disney? If you're in Disney, if you listen to me in these live broadcasts I've been doing every week for over 10 years, the last month or so, I've been calling Disney hoot and hollering over 100, right? I said 102 would be the trigger point for Disney. And sure enough, that triggered late July. Now it's up to 120. Where would you trail a stop? Okay, 119, reversion of the mean. High, low, bearish and go for 118, 119, 117, 116, not 140. Your exit, your trail stop. Target might be 140, sure, on a continuation later, but for now, we want to play defense. As a trader, remember you have two stories. You've got offense and you've got defense. And you want to trade within the range. So what I like to do is when I see red candles, I'm by definition on defense when I'm long, right? And when I see green candles, I'm on offense. Go for it. 116, 118, 118, 4, 119. Okay, thanks, guys. I'm seeing these scroll. Yeah, I would use just under the window low, right? Just under the gap low. So in the 117, 118, 119. The main point is you would not let it get under 115 no matter what. I would hope not, right? If you bought at 102 where I said you'd want to lock in a minimum $12 profit. Up here now is fine to sell, or at least to start to sell, but you definitely drop dead wouldn't want to get out anywhere below 115. You'd want to get out well ahead of that. 117, 18, 19, any of those is fine. Now, one of the things that I like to do is not only give traders entry ideas, but also where to exit, or where you can most likely make a good exit. Exit stage left. Now, one way to do that, one thing that I've just got launched here is the forum for active traders, and it's starting to get my members on board. And this is a forum for my live trading room members. And in it, I'm now, this is brand new. I just launched it last week, and it's exclusively for all of my live room members. And in it, I have pre-market watch list. We have videos. We have chart patterns that I update daily. One thing that I do is I will, for example, if there's a gap continuation or a mean reversion pullback, I will often screen cap that and type in the name of the pattern and put it in the forum. So that way you can start to learn the patterns and these are all based on the successful alerts that I post. What made that a good trade? Why was that one a good one? And how does it differ from all the other stuff out there? And so that's one thing that's a resource, a really good resource for my active traders. And again, if you're not yet a member and I'm on Trustpilot now and getting a lot of great reviews. Thank you for all of you who've written in Trustpilot reviews. I appreciate. Our live room is just $7 for a 2-week trial, and you can join with PayPal, money back guarantee, of course, and you can try it out and see. Now, I will tell you, I do tend to have kind of a fast-paced approach. It's like the only negative review I got was some guy saying he talks fast. Well, I'm a day trader. I'm not a turtle. I'm a rabbit. I'm not a rabbit. I'm a lion. But anyway, I run hard. So anyway, the point is you can try the live room for a couple of weeks for just $7. That's a great deal, and all kinds of good stuff. You can compare me. What else? One thing I put in here was some instructional videos too. A quick start video on how to set up your charts. Now you guys can look at that right now if you want, of course. You don't have to be a member to watch the YouTube videos, and one triggers the other trades, proof that I really trade, and all the rest of it. So anyway, and now with that comes access to the forum once you join as a regular member. So resources. Anyway, back to it. That's called an embedded sales pitch. And it's a good one because I believe in it. It's my life's work. So I think you'd be well served by at least spending $7, which is money back guarantee even, so zero risk, to try out my room for a couple of weeks and see what you think. There's so many thousands of people have joined over the years. I've run it 21 years, I think it is now. So a long time. I've been doing this a while. Anyway, back to our charts. Let's take a look at these. Netflix is on the bounce. We looked at Ford. Apple is at a resistance area and going back. So if you're in Apple, I would trail it. If I were in Apple, I would trail it stop at say 170. I'd sell it all if it gets under 170. That's easy, right? It's not rocket science. You look at that chart, and if you're long, you'd sell the 170. You wouldn't buy until it breaks well over say 182, which I don't think it's going to do anytime soon. Here's another chart we'd mentioned last week, EXTR. This one's pretty good. This is a nice continuation play. Hot sectors lately have included solar, right? And we've seen things like Run, which is a solar stock, and others are up on infrastructure spending, money going out into that sector. So that's a hot sector. Let's take a look at some day trading charts, and then we'll wrap up. One of my traders, Ari mentioned this one, Oxy Peep. I'm told William Buffett had bought some shares, right? It's one of our favorite oil sector stocks. And Oxy had mentioned it way back at like 65. Excuse me. My long trigger for members was over 65, and it ran all the way up to 72 before pulling back into the close. But Occidental Petroleum was a monster chart yesterday. So we'll keep that one on the radar, as well as many others. What else do we have? I think that's about it. UVXY was also pretty good on the run up. I bought on the morning and sold, the pivot, got stopped out trying to play some of these things, but overall green on the week on this thing. So really good. And what I like about this is after an extended run down, it's got a high volume reversal. So that's why I bought 1,000 shares. And so you can see large volume here. So it's big risk. This was a 52-week low. By the way, on the VIX ETNs and ETFs, I was trading VXX, day trading it live profitably on the flash crash day, the original flash crash like 12 years ago or whatever it was. I've been trading these things for many, many years. I've done millions of dollars worth. I did over 10.1 million worth of order flow in this instrument last year alone. So I'm extremely experienced with this. And I'm really excited right now because it's got, buying the VIX ETNs and ETFs is often extremely good right after a 52-week low. You often get, that's often the bottom of the VIX spike. The VIX spikes down and this thing spikes down at a 52-week low. Often that's the basing and you see a reversal back to the upside. So keep an eye on UVXY next week. Hopefully it'll do well for me. 1,000 shares, every dollar counts, right? Every dollar is $1,000. So, and my pain point on a swing trade would be, say 860. Let's say it gaps down to 920 on Monday. You don't sell you never sell the gap down, and seldom is it a good idea to buy the gap up in this instrument, unless it's coming off a 52-week low, which it is. Anyway, if it gaps down to say 890 or 9, I'm not going to sell it down there, but if it keeps going down, I will sell it all at say 870, 860. If it gaps up to say 980 or 1010 or something and keeps going up, I will double down by another 500, another 1,000 shares. I was in as much as 2,400 shares in a single run in this thing last week. I buy 400 or 500 shares at a time, 3 or 4 trades and scale in on the way up. And then at the first sign of trouble, if I have a trailing stop, say 8 cents, I'll tighten that to like 3 or 4 cents. Or if it's a hard stop, I will tighten that in to within 4 or 5 cents of where it's currently at. And that way I want to lock in as much of a profit as I can. Anyway, that was a good play. Soxes has been okay. I also like Soxes was good. SQs was okay, not as good as it's been, but had a really good rush up. And I bought just 100 shares each of this just for placeholder trades. So, and I also bought some TZA. And thanks to my trader Ari for mentioning that. It's a Russell small cap inverse. I used to trade it years ago. I stopped, or I didn't trade it as much, I should say, this last year and a half. But I did buy some Friday. So, gap continuations are usually good plays for swing trades because it tells you got a rush of demand. People are willing to pay up for it. Like I did, I bought it near the high day at the end of the day. For swing trades, it's often a good idea to put on a small position in the morning, but make your main position dependent upon how it closes for that day. That's how professional traders do it. You may have heard that saying, amateurs control the open, professionals control the close. And that's why the biggest capital expenditures are always spent by hedge funds and proprietary traders and discretionary traders and all that at the end of the day, between usually 3:15 to 4, and most of that volume, the vol comes in 3:40 to 4, the last 15-20 minutes. That's where we all make our big decisions for our swing trade. Either we scale in or we scale out or we just let it ride. In this case, I initiated new swing trading positions in SQs, SOXS, TZA, and mainly in UVXY, because I want to buy volatility because I think it's overdone. Now, does anyone agree with me? I mean, you're free to disagree, but I think these may be good pivots, right? And to me, that's a beautiful pivot. Huge, big range, 50 down to 28. So it got almost pretty much cut in half with the 45-degree, and it's bouncing off support. That's probably a good entry. Now, the problem is, and I always like to keep it real. Oftentimes, while it looks good on paper, in the real world of trading, oftentimes you get shaken out. Because let's say it gaps down to 28, and they say, F about it. and then it runs up to 36. Well, there's no way it would go up without me. One of the biggest lessons learned in my career and trading tens of millions of dollars worth of stocks is always re-enter. Always have a sequence. Look at your approach at making money out of this thing is I'm going to do 3 or 4 or 5 trades for a swing trade over the next few weeks, at least, right? But at least a few trades. I'm not going to just bet it all and hope it works. And then if it doesn't work, you give up. That's not how to trade. A professional segments their trades. You layer your trades or ladder your trades, leg your trades, however you want to call it, piecemeal your trades in bits and pieces. And I'm glad to see that Mr. Booyah is mentioning that on his show because that's very valuable and important that people get that. So I bought some TISA, I bought some SQs, I bought some SOXs. I bought all the things that were green yesterday on this list, right? Every single one I bought. And most of the capital through a UVXY. Now, what do you think? What do you guys what price do you think comes next? 8 or 10? Now, I could be wrong. Maybe it gaps down and runs down to 750 or something. That could easily happen. I'm fully aware of that. I'm a speculator. I take calculated risks. I think it's more likely to get up than down, but anything can happen. We got a large green volume bar there, so that supports the thesis of buyers are in charge on high volume after an extended run down. So I think the odds are slightly in my favor that I might have gotten a bottom there. Let's see, gold long. The gold hasn't done much anything. I like the GDXU. If it ever pivots, it started to bounce, but it gave it right back again. So I was in and out of it up here. I'm going to get back in if it. I'll put on a small trade over 4, and like I said, 505, $5.05 is the trigger point that I want to use to start putting some size on this one. But yeah, I like. Thanks for asking. Yeah, GDXU would be a good play over 5, but not right yet. This is our S&P, and you can see it's still in. It did break the downtrend here, but it's pulling back. So we may well be due for a 50% retracement. Exit target on a retracement, the S&P would be 3,900, just around 30 handles down, right? 35 handles down. So we're currently at the where are we at? Right near the 420, right? So anyway, may well have some room to the downside. It's a smart idea, by the way, and again, not trading advice, but if you are long various stocks and you bought on the way up, that's a good idea. I would start scaling out at a minimum on the way back down if, in fact, the market is going to sell off for a bit. It may just pull back for a few days and then keep going up. We have no idea, right? We can't predict. But what we can do is react with the appropriate trade management strategies. So that's what I do. I scale in incrementally on the way up and then scale back out on the way down. So that way I'm not making big erroneous trade decisions. I may make plenty of erroneous trade decisions. I do, but I also make successful trade decisions. And the whole goal is to make the numbers and the math kind of skewed in your favor or moved in your favor. And the way to do that is to incrementally trade charts with big ranges in increments. So anyway, I think I'm going to wrap up for now. I wanted to thank you all for being here. We've got lots to look at, and our market has moved quite a bit. And we've got plenty to work with. So that's our S&P. We'll pull into the 3-month. Kind of a parting thought here. One thing I like to look at is on the S&P, I look at weekly price ranges. What's the Monday through Friday look like? And that's why I like to do these shindigs, these live events with all you good folks here on Saturdays, because that way we can look back over the week and look forward to the week ahead. So anyway, market was up 1, 2, 3, 4, 5. It's slightly down over the last week, right? What you do is to determine whether or not you want to be long or short the market, or at least long or out the market, or in my case, long the inverse CTFs, the market to short, is look at the channel. And this is a smart idea. Think about this. And I don't know if your software can do this for you. I wish mine could. I use the really old eSignal version because I've been using it for 20 years. But look at a 5-day channel, the Monday through Friday channel, and connect the dots. And I've never told this to you guys before, but it's a good strategy. 1, 2, 3, 4, 5. Kind of connect the dots on the 5-day. And the way you start, what counts is the Monday and Friday. So that's, look at this is, I've never revealed this before, but this is what I do myself is I'm looking at the Monday through Friday. Of course, all my competitors are writing this down. Oh yeah, this is good stuff. I got to copy it and make a big $10,000 course on it. Anyway, the point is connect the Monday through Friday, and is it net up or down or sideways? And we're moderately down. That's Monday, Tuesday, Wednesday, Thursday, Friday, right? So it's down trending. So we have a down week last week, obviously. And so we want to see if it does lose support under the 42. Now we're at the 4,200 support. So I'm selling into support, which is not a good idea. It's probably better to wait. I'm not very patient though. That's probably one of my biggest weaknesses is I overtrade and I'm impatient, but I love it. That's what I live for. And I love working with you guys. I hope I can share some lessons learned. Anyway, think about the 5-day pattern. It's down. So therefore that tells you you need to be scaling out of swing trading long positions and into inverses if it continues down under this key support level here at the 4,200. Right. So as long as the 5-day channel is up, you stay long for swing trades. But as soon as it starts to flip back to the downside, you tighten up your trailing stop to right under, lock in a profit, or at least you're smart enough to know not to initiate new long swing trades in a down market. That's usually a bad idea. A good idea to do inverse positions or buying puts or doing whatever you do that is bearishly inclined. Hey, thanks, Bill. Saying great. So, hey, when did I play TBT? Nope. Let's see what else. Does oil go higher? It goes up and down. I have no prediction on any of these things. All I do is I just follow the charts and I try and make money with the price action and scale in and scale out based on what they're telling me. So now let's see, does oil go higher or lower? Well, if we take a look at, it's no story, right? Or short crude, I trade SEO and I also trade UCO for oil. And there's not much of a story. It's still a overall down chart on the UCO, right? This is our long oil ETF, and the short crude oil ETF that I trade is SEO, and it's up, but it's hacking around sideways. So the answer is we got to wait and see for it to either get above the 29 or below the 21, right? So whatever thing you're looking at, we're still range bound. So we're range bound consolidating oil right now. So we're going to wait until we get that commodity above resistance or below support. Until then, it's anyone's guess. And I don't like to trade to guess. I like to trade when I have a reasonably good chance of being successful. So day trading, sure. And I often day trade this many days, but swing trading, I don't see any story here. I don't see a compelling case for a up or down play, as opposed to something like, saying selling Apple at 70, at the 170 makes sense, right? Or buying, say, the UVXY, if it bounces over the 10, makes sense, right? So when I have compelling stories, that's how I make money as a trader. When I trade inside ranges, I usually get stopped out. So I learned the frustrating way is I learned many things in life. Play it safe and play it smart. All right, well, we're going to wrap up. Thanks so much, gang, for being here. I appreciate it. You guys have an outstanding weekend, and do be sure to try out my live room at trademastery.com/live. It's only $7, so what a deal, right? And it's money back guarantee even on that. So hope that this has been helpful, and I hope that you guys make some money next week. That's what we're in it for as a team. That's why I had so many smart people in my live room, like Mick and Ari and so many others, and Wendy's. And I like to have a team approach, and our community of smart people come together. And they'll often give me tickers that I pull up, and often those are even better than the ones I found. So that's great. We got all these eyes and ears, a really big room now. And that's why I'm adding new bonuses and I'm raising the price of the room to inflation, all right? Or just because I want to, but and it's worth it. Sometime in the near future. I was going to do it this month, maybe in a week or two. But in the meantime, you can lock in a low rate now if you want to try it out. So trading the open, and we will see there. Hey, Miss Nan, let's see, if you have any questions, type it in the chat box. I see Nan's raising her hand. Hey, Nan, how you doing? But what's your question? Let's see, what time of day am I active? As many times as I can be, all day long. No, I run the live room from 8:30 till 11 and from 3:30 to 4, plus any FOMC or other Fed release time frames. Like if there's a 2 o'clock Fed on a Thursday, I'll be there 1:30 to often till the close, but at least till 3. So 8:30 in the morning, we do our pre-market watch list. We go over all the charts that are gapping. I give you specific ideas starting at 8:30. So you have a whole hour. And you don't have to show up at 8:30. In fact, most of the people wait till I think right after 9. But for us early birds, I'm there for you guys and for myself at 8:30 in the morning. So we got a whole hour together before the bell. And that's a really good advantage that I offer. And we go through the pre-market gappers. We go through price points, answer questions, pull up charts from members if you guys have any charts you want to pull up, and we go through it together. So it'd be great to have you guys as part of the room. I've been running it for over 20 years now, and it's been very successful. So I appreciate it. You guys take care, and I will see you hopefully in the room. And again, it's at trademastery.com/live. Have a good weekend. Make it count. I'm going to go spend time with my family. They're important, and I'll see you next time. Bye for now. Trade smart. Make money. Let's go get them. Do your best. Take care.